And welcome back. It's Jason Walty here. I want to talk about some early indications of home buying demand that's going to be impacting our housing market in the next coming months here. I actually found a really good report I want to share with you guys. It's actually a report I have not shared with you guys in previous videos here. So this is a brand new report I have not shared on the channel just yet. This report was actually published on December 12th. And it's Black Knight's Mortgage Originations Market Monitor. So they look at originations for mortgages, whether it's for people looking to buy a house or people who are looking to refi their mortgages here. So it's a really early indication of home buying demand, looking at rate locks of people locking in the rate and therefore closing for buying a house or therefore closing to refi in the next month or so. So rate locks is this right here. If you guys aren't familiar with the term mortgage rate lock, a mortgage rate lock guarantees the current rate of interest on a home loan while the home buyer proceeds through the process and closing process, or through the purchase and closing process. This lock protects borrowers from the potential of rising interest rates during the home buying process. So if you guys are looking to buy a house, you guys get your offer accepted from the home seller, you can lock in your mortgage rate. It depends on where you live, but usually you can lock in your rate very soon after you get your offer accepted. So you lock in your rate, and then when you close escrow, when the house becomes yours, that rate is the rate you're going to be paying on your mortgage. So that's what's called a rate lock. It also works for refis as well, because if you refi your mortgage, it takes approximately 1 to 2 months, sometimes longer. But you can, once you lock in your rate, that's the rate you're going to be getting once you complete the refi process. This is what's called a mortgage rate lock. So Black Knight had a really good article here, or a report here regarding people locking in the rates, whether it's for purchasing and also for refis here. And it says here 30-year mortgage rates fell 48 basis points or 0.48 percentage points, basically half of a point, in the month to finish November at 6.58%. So rates fell 48 basis points from October through November, end of the month at 6.58% for the month, according to Black Knight here. It says here, though, that despite this rate reduction down by 48 basis points, overall lock volumes dropped 21.5% in November and are now down 39% over the past 3 months. And they're also decreased by 68% compared to 1 year ago. So overall, lock volumes includes, of course, people who are locking in the rate for refis, but also for purchases here. And also this 21.5% reduction in November is actually the 8th consecutive month where lock volumes actually decreased. Let me say that again. This is the 8th consecutive month where lock volumes actually decreased in the US here. So purchase locks were down 22% in November compared to October. These are for people looking to buy a house who got their offer accepted and they locked in their rate and they closed escrow about 1 or 2 months later. So purchase locks are down 22% despite the fact that rates actually, or mortgage rates, decreased by about 48 basis points. Also, refis decreased by 17% on a month-to-month basis, and cash out refis were down 18%. And again, this is all compared to October this year. And also on a side note, I do want to mention this because rates at 6.58% in November, rates are actually much lower than that. And have a look at this, because as of today, which is the 13th of December, rates are at 6.28%, the lowest rates we've had since mid-September this year. So rates more or less are at a 3-month low right now at 6.28%. About a month and a half ago, when was it? Back in early parts of November 3rd to be exact, rates were approximately 7.3%. Going back to October 20th of this year, rates average at 7.37%. Now they're only 6.28%. So rates have decreased big time compared to the highs we saw back in October and November this year, but they're still up by 3.11 percentage points from 1 year ago. And that's, of course, average rates are at 3.17% 1 year ago for people with exceptional credit. And also, as you guys can see right here, rates decreased by 11 basis points today, which is the 13th again. And this is because their consumer price index report came in lower than expected here. This is based on inflation here. It says the consumer price index rose only by 0.1% from the previous month and increased by 7.1% from one year ago. The estimates for the month-over-month change was actually 0.3%, actually came in at 0.1%. And the year-over-year changes, they were estimating, or the street was estimating, to be at 7.3%. It actually came in at 7.1% for November, though. And because this latest CPI report came in lower than expected here, rates decreased by 11 basis points as of today. And going back to Black Knight's report right here, Scott Happ, who's the president of Optimal Blue, which is a division of Black Knight, mortgage rates pulled back slightly in November based on what the market perceived as good inflation news. That was back in November, good inflation news. And again, inflation came in lower than expected yet again today, which is December 13th. Despite this improvement in rates, though, lock activity remained subdued. In other words, we're seeing a decrease in the number of people who are locking in their mortgage rates either to buy a house or to refi their mortgages. And speaking of lock activity remaining subdued here, lock activity was down 21.5% on a month-over-month basis in November, remaining at the lowest levels since February of 2019. A 22% drop in purchase locks was actually one of the main contributors. And this 22% drop in purchase activity or purchase locks was impacted or reflected upon the strong impact of seasonality, the long Thanksgiving holiday weekend, and the lack of housing inventory. I'm kind of scratching my head regarding this lack of housing inventory. If you compare housing inventory now compared to 2019, obviously we have a lack of housing inventory. However, though, when you compare inventory compared to 1 year ago, we're up by over 50%. And this is based on data from Realtor.com as well as AltosResearch.com. And here's what I mean by that, because Realtor.com reported for the week ended December 3rd of this year, inventory is up by 53%. And also AltosResearch.com is reporting gains of 57% on a year-over-year basis. So when Black Knight says we have a lack of housing inventory, it depends on what time frame we're talking about. Are we talking about pre-COVID? We obviously have a lack of housing inventory compared to 2019, for example, but we have over 50% compared to 2021. Black Knight also reported that we're seeing refinance activity continue to fall by double digits, with cash out refis declining by 86%. Overall refinance activity made up 15% of this month lock activity, a near record low share. In other words, approximately 85% of these purchase locks or these rate locks came from purchases, and 15% of these rate locks came from refis. The president of Optimal Blue also had this to say. While we would normally expect to see seasonal pullback in activity in November, we're also seeing exceptionally strong headwinds in purchase activity from continued affordability challenges and a refinance market that has basically dwindled to non-existent levels, which obviously makes sense given the fact that average rates in 2020 and 2021 were at 3%, and now rates are at 6.3%. He says here, stalled inventory and rates nearly twice what they were 1 year ago are combining to negate the benefits of recent home price and rate declines from an affordability perspective here. He's absolutely right, because we're not seeing this giant decrease in home prices to make up for the fact that rates have been absolutely skyrocketing this year. He's also right regarding stalled inventory, because look at this. Here's AltosResearch.com for housing inventory in the US right here. So look at this. Back in mid-April, all the way until we hit August, inventory was absolutely skyrocketing. But ever since then, it has been plateauing out across the US. Also, according to Black Knight here, purchase lending, which accounted for 85% of volume of rate locks, fell 22.1% from October and more than 50% from last year. So we're seeing 50% fewer purchase rate locks right now compared to 1 year ago. Also, the share of locks with adjustable rate mortgages fell to 10% in November from 13% in October. So the share of people looking to buy a house or refi their mortgages, only 10% are using adjustable rate mortgages. And here's a look at the market mix. Again, 15% of these rate locks came from refis, and 85% are coming from home purchases. Now, here's something I found to be very interesting, because they actually share the average credit score by each of these, I think it's 20 major markets in the US. Again, these are people for looking to buy a house or looking to refi. So look at this. The average credit score nationwide for people who have locked in their rates in November was 721. Which, by the way, in order to get the best rate, you need your FICO score to be in the range of 740 or higher. So at 721, that's a very high credit score overall on a national level right now. On top of that, out of these 20 markets they looked at, every single market here had an average credit score of over 700 for November. They also provide the share of purchases as refis by each of these markets as well. And Los Angeles, Long Beach, Anaheim, California, more or less the greater Los Angeles area, look at this. At 24% of the share of refis, this is the highest share out of these 20 markets they're looking at. So 24% came from refis and only 76% came from purchases, whereas here's the national averages, 85% and 15% for refis here. And by the way, the lowest share of refis were actually in Phoenix, Mesa, and Scottsdale, Arizona, where the share is only 8% for refis. Now here's a look at November's rate lock volumes by loan purchase. In other words, looking to purchase a house, do a cash out refi, or just do a regular refinance mortgage here. Now look at this, the 12-month change, look how big these decreases are. Down 50.2% on a year-over-year basis for purchase rate locks. Cash out refinances down by 86%. The month-over-month change down by 18.4%. Regular refis, in other words, they're not getting any cash out of their house, is down by 17.1% on a month-over-month basis and down by a whopping 93% compared to 1 year ago. Overall, down by 67.8% when including purchases plus refis, and down by 21.5% on a month-over-month basis. Now, here's something I also found to be very interesting. Here's a look at average credit scores by loan purpose. So look at this. It's really interesting to see this because cash out refis is this line right here. This is looking at credit scores going back to December 2019. So ever since really February or January, February this year, credit scores for cash out refis absolutely started tanking here. So the average credit score for people who are doing a cash out refinance for November was only 786 was the credit score here, the average credit score. For purchases, it's 728. For regular refis, it's 736 is the average credit score. So for people looking to do a cash out refi, their credit score is well below the levels for a regular purchase or for a regular refi here. So the change in credit scores compared to 12 months ago, look at this. Cash out refis, their credit score decreased by 40 points compared to 1 year ago, whereas purchases plus regular refis were more or less flat from 12 months ago. And you can see that when looking at this graphic right here, because for regular purchases, the credit scores had been in a range of 720 to 730 for quite some time, going back to 2019. Whereas cash out refis have been absolutely tanking ever since really the first part of this year. Black Knight also shares average credit scores by loan product as well. So FHA loans, the average credit score is 661 in November, VA 704, a conforming loan at 746. That's the average credit score for people doing more or less a conventional loan. And very little change compared to 1 year ago. Flat for FHA, down slightly for a VA, and up slightly for conforming loans. And lastly, this is a very important trend to look at as well, because here's a look at pull-through rates, the percentage of locks that actually become funded loans. So if you're looking to buy a house, you lock in your rate, it doesn't mean you're actually going to be buying the house. You can back out. Or if you lock in your rate and you're going to be refinancing, it doesn't mean you're going to be closing that loan. So here's a look at people who are locking in rates and the percentages who actually become a funded loan. In other words, when you're looking to buy a house and you close escrow, the house is yours, that is a funded loan. So look at this. Purchase pull-through rate is at 70.3%, whereas refis, that pull-through rate is only 51.3%. So what this means is that out of all the people who locked in their rates in order to buy houses, 70% of those people who locked in rates in November actually bought the house, whereas only 51% actually went through with the refi. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day, and I look forward to seeing you on the next video.